Welcome to another Trader Tip Tuesday, where today we are going to go through an example of a trade that made over $3,000 on a $225 risk in less than 4 hours. We preach that big winning trades are the key to being successful as a trader. And so this is the kind of example, kind of trade that we're talking about when we discuss this. So this is anatomy of a 13.4R winning trade in less than 4 hours. So this was in the S&P, and this was last Tuesday. This was on January 11th. And we basically got long the S&P at 8:56 in the morning, right here, at 461.31.5 with a 46.27 stop. And we got a rally, we've got a retest of our entry level, and then we rallied again all the way up to our target, where we exited at 46.92 at 12:47 p.m. So we were in the trade less than 4 hours, and we made over 60 points on this trade. It's $50 a point, so it's $3,025 in profit on a $225 risk. So in this chart, we're going to go back and forth. There's two different charts here. The chart on the left represents two different time frames, the weekly time frame and the daily time frame. The chart on the right represents a daily time frame and an intraday time frame. This is a tick chart. So when we trade with ticks, we only generate bars when the market trades, when the market ticks. So if the market's really busy, we generate lots of bars. And if the market's slow, we generate bars very slowly. So there's a pace to tick bars that relates to the market's volume. That's one of the reasons I like it. So let's go. We're going to talk about some of the characteristics of this trade, and we'll go back and forth with the chart. So first of all, the market had been selling off the prior week. So the market became oversold by the VIX being overbought. So we had indicators we used that basically identified the VIX being overbought, and we know when the VIX is overbought that the market is likely to rally. The market's actually oversold. The next thing we had, which you could start to see on this chart, is we had multiple time frame convergence. We had multiple time frame support convergence. So we actually had monthly support, which we didn't see on this chart. We had weekly support, and we had daily support, and we had intraday support. So we had a minimum of 4 time frames all lining up in the same place to support the market. The next thing we had is let's go back here. So here we have a weekly support, a daily support, and an intraday support right here. So there's 3 time frames of support that we can see on this chart. Plus we have monthly, which is not even on this chart. The third element we had is we had the trapping of volume on the daily time frame. So we teach a lot about analyzing volume traps. Is volume what we call migrating and pushing, or is volume trapping, where participants are now stuck and going to have to get out? So we had a trapping of daily volume right in here. So the market had sold off, it rallied late on the day on Monday, and basically trapped all the shorts. Well, and so we were leaning into this area where all this volume was trapped to structure our buy. Then we had the daily time frame had momentum that was really strong down, but now that momentum had started to decelerate. So now if we buy, we're buying with momentum decelerating, and we get to play for a reversion to the mean as the market works off its momentum. So we have that here. We had a deceleration in momentum on the daily time frame. And lastly, we had intraday strong buy volume coming into the market. And we actually saw that here late in the day the prior day. So there was a lot of buying that came in off the lows. Now the market kind of made a retest of where all this buying came in, and it found more buying. So we found support at the weekly support, the daily trap volume, the daily deceleration in momentum, and the intraday volume, which led us to this move back up. So this was basically a reversion to the mean trade, but because we structured it through multiple time frames, we were able to dramatically shrink the risk to only 4.5 points. And we're able to make over 60 points on a 4.5 point risk. So you can see when you make 13 times your risk when you're right, you can be wrong a lot and still be ahead. This is one of the reasons I really like this. Big winners are like aloe for sunburn. Big winners basically cool off losses and help you recoup from losses really quickly. So that's what we see here. So stay tuned every Tuesday for additional webinars that teach you different ways to think about trading performance to help you trade at an elite level, similar to the trades that you saw today. Hope everybody has a great week. God bless. We'll see you next Tuesday.